they're pretty much enticing retailers to get involved. And at some point, whether you push the price too high too quickly or you push it down too low and you scare the hell out of everybody, at some point you're only going to have the big players in the market, which are institutions and whales. Welcome back, YouTube. So in today's video, I wanted to talk about the bounce that we're seeing in crypto. I mentioned yesterday, I made a video stating that were we actually going to experience a rally, or is this an actual bull trap? And I mentioned that we're possibly going to see some swaps here on the shorts. And this is literally what we're seeing here. I'm going to pull up Bitcoin in a moment. This is the Dogecoin shorts, and we're seeing that consolidation, that pullback in shorts. As we can see, Dogecoin is down roughly about 20% for the day. So as they remove that short pressure from these coins, it's going to be a lot easier for the prices to be influenced. If the buy orders, or at least the sell orders, are being removed, that's typically going to relieve that downward pressure. So you're more likely to see a run up. And remember, the volume is low technically across the board, so it's not going to be difficult to influence these prices. Let's take a look really quickly here at Bitcoin, because I want to paint the picture for the market as well. So if we look here, we'll see that Bitcoin, the shorts here in Bitcoin have consolidated all the way down to around their 200-day moving average. Dogecoin, not so much. We know why, but we can see that Bitcoin is roughly, literally hit it right on the head at the 200-day moving average. A lot of the shorts come out of these positions is because when you are shorting a position, as we know, we talked about Goldman Sachs saying that this is the highest amount of shorts that they've seen in their history. When we see shorts kind of pull out of these positions, they're pretty much enticing retailers to get involved. And at some point, whether you push the price too high too quickly or you push it down too low and you scare the hell out of everybody, at some point you're only going to have the big players in the market, which are institutions and whales. It technically doesn't work, and there's a lot less profit on the table if you've scared retail or if you discourage retail from being involved in the market. So you see, this is pretty much the essence of a bull trap here. When you drive the price down and you start giving these little flashes, these little pumps, saying that, oh my God, it's getting ready to take off. It's kind of like, hey, everybody get on board now. You're going to miss the bottom. Everybody come on. When you look at certain indicators, like the stock market is going the opposite direction, or the stock market is kind of flat, and you see that the crypto market is doing the exact opposite. When you see that we don't have any solutions for the macros, when you see that, companies like Voyager and stuff like that are borrowing money to the tune of like $500 million from different companies and stuff like that. You see these large institutions getting delisted, and bonds are taking 90% haircuts across the market. We see that inflation's out of control, and you're saying that, oh, well, it's getting ready to be a hedge. Everybody, all the whales and stuff, they're going to pile in the crypto and send it to the moon. You might as well get in right now. I'm not saying it's a bait and switch, but I'm saying that don't be too optimistic right here, because the macros don't align. There's massive, massive uncertainty here, and institutions will not play against themselves here, or just simply gut the stock market out and then put all of their money into crypto and pretty much turn over the stock market to the retailers. And I do want to say this, because I do believe that this is very important. I do believe the price action that we're seeing, or the price points that we're seeing on Bitcoin and on Dogecoin, on Ethereum, on a lot of these coins here that I'm long on, I do believe these price points are excellent buying opportunities. This is regardless of whether or not this is a bull trap, regardless of the macros, regardless of anything. As an investor, I'm thinking 5 to 10 years out. I believe all of these prices are absolutely fantastic. The best time to get into any of these coins would have been 5 years ago. And that's the mindset that I have going forward as well. So regardless of what point you got in 5 years ago, you'd have been a lot better off right now. And I believe that going forward as well. So I'm not saying that you should try and time the market, but what I'm saying is take that into consideration when it comes down to allocating your funds into the market, whether or not you have a total of $1,000 that you're going to put in right now. And you say, okay, do I want to kind of spread it out and put $100 here and there and see where this goes, or should I just put it all in right now? This is the bottom. If you're long term, then yeah, coin count, the percentage that you're going to get into, if it's something like a Bitcoin, yes, that's going to matter more. But give yourself the option to capitalize off of some of those better entries. We've seen this before. A lot of these analysts and stuff that are saying that it was going to go, we've hit the bottom and we're rallying to the moon. Those are the same ones that said that Bitcoin was going to go to 100,000 before it corrected. And for a while, it looked like that. We had several consolidations where we kept going up, and retesting and retesting and retesting. It looked like they were right. But when we have the macros always supersede the micros, this is a trickle down effect. And where the big money is, where the big uncertainty is, this will kind of lead or steer the market into certain areas. I know that we want to say that Bitcoin and a lot of these other coins, because of inflation rate, they're kind of like hedges against inflation. Not as long as the institutions are using it as a piggy bank to cover their over leveraged positions in other areas. I mentioned this on Twitter yesterday. When will Bitcoin hit an all-time high? When institutions and whales come back into it and they decide it's time for it to hit an all-time high and they feel comfortable with the macros in the market. Retailers are not going to put $2.2 trillion back into the crypto market anytime soon, or even if they're capable of doing it. That's another question, to put the crypto market even back on par with where it was. Could they pump it up and use it as a hedge to kind of consolidate their value, or at least just kind of keep it more stable in massive times of inflation? Yes, they could, but at the end of the day, putting your money into coins like that does not actually make money. These people prefer cash flow and being able to generate revenue while being in their position. This is why the stock market is their go-to. In crypto, if you're not shorting it, then you're pretty much going to have to buy and hold it and wait for a capital gain. There are pros to that, like which we've seen over the course of the last year. But in uncertainty, they're going to typically sell off crypto at a much aggressive rate and use it to cover their positions, bottom everything out, and then start investing again. In the event of bottoming everything out, you'll have these times or these flashpoints where you get these little rallies here. And again, they need retail involvement. So you crash, nothing goes straight down. So you have the massive sell-off. You make it look like it's about to take off here. Retailers jump in, and then you sell off from underneath them again. And that's typically how you raise even more money on the way down. It's not even uncommon for this to consolidate and pump up for several percent or for a week or so to pretty much build comfort around those price points and lure and get as much new money in as possible. And then all of a sudden you see the shorts come back in and the negative news starts rolling out again. And then next thing you know, it's going down again. If you're long term, this is not going to matter as much. But for people that are trying to trade, or people who are trying to get the best entry for like their DCAs, make sure that you're compiling and painting the whole picture versus just focusing on price point. Because at the end of the day, there's a lot of factors that go into determining price and entries. I just wanted to provide you with this quick update. Like the video if this provided you any value. And of course, subscribe to the channel if you want to support the channel. It is absolutely free for you to do so. And again, it does help the channel. I appreciate all of you. Thank you. And until next time.